Hey guys, alrighty. So we had a nice little week here. We had a little bit of volatility with that Wednesday dump. Other than that, if you kind of look, we didn't really see a whole lot of movement. Not much happening. So um, basically, what I'm kind of eyeing here, and I haven't had time to make too many videos this week, but is that we are in a bigger overall range now. So if you look back here from really November 22nd to about December 8th, and we finally broke the upside of the range, you can see here we're setting up a similar idea here. So we have our first support of the range at really 469.26, but we'll call it down here at this bottom. So we'll just call it 468. And then we have our upside supply from Tuesday at 474.84. You can see today or I guess Friday, we touched this and hard rejected. So this is now our upside of the resistance. We did get a new demand, so we do have a quick or soft support here at 471.28. Really, the way I'm looking at it is on a daily time frame, the buyers have on SPY especially continued to weaken until we really see those buyers come back in aggressively. Likely any upside we get is going to see a very, very hard rejection, much like Wednesday at some point. The bulls really need a closure over 474.84, and the bears realistically need a closure under 469.2. When we go over to the weekly time frame, now last week I mentioned that we had that imbalanced close, meaning we got a supply, but we closed over it. So now in general, when you get a supply, we should close under it. And when you get a demand, we should close over it. However, we didn't get that. So what markets did was rebalance. So now that we got a new weekly demand at 459.41, which is the first demand to be put in since this rally started on Halloween. Now you can see we are pushing up a really nice bull channel right here. We did not quite get to 476.28, which is that weekly supply from all-time highs. So that's really our next major resistance. And then our major support is down at 459.41. So again, we could be forming a really large range in this area here too. Not kind of like we did back here in August and September. Going over to futures here, so we put a new demand in at 47.50 off that double bottom, and then we came up, we touched and rejected off 48.19 supply that was put in off the double top on the 19th. This really shows a much more clear, in my opinion, range than it does on SPY and the Qs. You can see since we got here on December 13th, which was FOMOC day, we've basically just kind of chopped in the same, this is about a 60-point range here. So this doji candle here is actually forming a really nice potential evening doji star pattern, which would mean Monday or Tuesday, because Monday we're closed. Tuesday, we will see that drop back down here. Now, again, same thing here. We had buyers come in yesterday to support this new bounce here, but today the buyers again weakened. So until we see those buyers come in and hold, likely we are going to either hold in this range or eventually we're going to break through 47.50 demand and start targeting some downside here. As you can see here, we really since December 7th have not even touched, since October when we gapped up over here and just sort of pushed right through, we have not back tested the daily 20 EMA support, an actual touch of it. This was the first touch of the 8 EMA support since December 7th. So I would like to see a back test of that support area, and I think that actually could project us to all-time highs. Now going over here to the weekly, we did go through 47.61, which is that weekly supply from all-time highs. Remember, futures has a contract roll up about 50 points, I think it was 55 points or something like that. So, we are over all-time highs here on futures, but again, relatively speaking, we're not necessarily over that. So, but looking over here, we basically have not even touched the 8 EMA since November when we pushed through. So I would like to see some sort of back test of that area. But our projected upside max level is about 49.20 based on our channel here. However, bulls will need to really defend 47.61. Going over to the Qs here, same thing. We got a new demand at 406.97. You can see our range is building that has started on December 14th. So really, I would say 403 as support. And then you could even extend this up to 410.5. Again, much like we had here in this range where we kind of just chopped here for, this is almost a month. Now, again, we have not seen buyers on the weekly, or sorry, for the daily of Qs come in to support this further upside. So again, any sort of upside push, likely until that support comes in, is going to result in a pretty good rejection. However, I still would not be bearish until we can close under at least 403.24. Going over to the weekly here, same thing here. We're just kind of riding up nicely in our little bull channel here. Upside projections about 415.5 as our next major resistance. Same thing though, we're going to have 398.84 and 405.57 as our potential new supports. You know, we did hit all-time highs this week on the Qs. So, you know, there's a really high potential that this could result in a little bit of a correction to the downside. But again, even if we do get a correction to the downside, I still find that to be bullish until we really probably close under the daily 20 EMA support on SPY and NQ. Really, you know, it's healthy to have a pullback. It's not healthy to have this sort of aggressiveness to the upside without any sort of pullback. You know, even during the crazy COVID bull markets and things like that, we had strong pullbacks. We are very much so absence of any sort of pullback. I mean, if you look here, we had one major red day, and that pretty much was our pullback this whole last, basically almost month of trading. So, you know, it's definitely much needed to see a major pullback to the downside. And again, I don't think that would be in and of itself just having a pullback that bearish until we start losing some really critical support. But we got a 16,788 new demand off the double bottom. I do still think this is our lower part of the range though at 16,738. And then you can see upside wise, we came up, put our double top in at 17,028, came down, bounced, and then we hard rejected that again today on Friday. So again, possible doji reversal pattern back down forming here. So we could get a new supply right here, and then that would confirm that we are in this tight range. And once we break one way or another, that would indicate when you play that direction. Going over to the weekly here, kind of same thing here. We are, you know, pushing up, pushing. Same thing, upside projection realistically is about 17,315, I'd call it. And then you can see that now we're going to have 16,333 and 16,594 as our critical support areas to hold. Now, the VIX has been, I don't want to call it useless because I think it still has a purpose and I still like to watch it, and I probably still will watch it for quite a long time until I find that I don't need to anymore. But we have seen some very odd movements the last, I would say, month of trading. Now you can see the VIX is just chopping, which in and of itself is not that big of a deal, but it's the way it's doing it. So for instance, you know, we had yesterday, Thursday, we had almost, at one point, we were up almost 6% on the VIX. And at that moment, SPY was up about a full percent. So that is a huge just phenomenon, I would call it. You know, every now and then, like back here where we're kind of chopping in the VIX and you get maybe like a small 0.5% green day on the VIX, and then, you know, market's up like 0.25 or 0.4%. I don't think that's that big of a deal. That's, you know, just kind of the normality of being at such a low level on the VIX. But for instance, you know, to have a huge 9% day on Wednesday on the VIX, be up 6% the next day, and you know that this is the biggest move up in 2 days on Wednesday and Thursday on the VIX since October, and markets essentially closed at the same level they were at. So, you know, we are seeing this huge move. And even yesterday on Friday, we had at one point, I think we were up almost 2%, 3% on the VIX. and the VIX was rising, yet markets were rising. And the only time that the VIX actually sold off was when we had that end of day weakness in the markets. So I'm not really sure what's going on there, why the VIX is trending so well with the markets, but the biggest thing I'm noticing here is we now have a massive range established from 12.08 to 13.66. So we did get over the daily 20 EMA resistance, and this is the first time that's happened since back here at the basically the trough of this bull market back in October, right before Halloween. So you would think being over the 20 and 8 EMA now that this is going to start to move up on the VIX, which then would obviously start to move down on the markets. And I do think that's probable. But my biggest concern here is that we did come up, put a new supply in, and now we're pushing back down. So essentially, if we're going to get the correction, and again, assuming the markets will let us get that correction, we need a double bottom here on Tuesday off the 8 EMA support to push up, and then we need to see this 8 and 20 EMA cross over, which technically would be bullishly for the VIX, but bearishly for the markets. Now, again, next week is on Friday, the JPM collar. That's when that rolls. I did a post about that on Thursday if you want to read about that. But essentially, there's going to be a ton of OI coming off the books from JPM, and they will roll their collar. I have a feeling we could chop into that collar roll. And then I have a feeling based on the collar rolling that come the first week of January, we might finally get our big correction to the downside. But we'll just kind of see what this market takes us this week. It is a 4-day week. Like I said, we are closed on Monday for Christmas. Tread lightly in 4-day weeks. 4-day weeks generally are very low volume and can just be some not super great trading. So just be careful when you're trading. Trade light. I had a great week of trading, but I'm still trading very lightly. I'm taking it small wins here, not trying to push for the big wins. The most interesting thing to me is that we have such high volatility, relatively speaking, in the movement of the candles for how low the VIX still is. So, like on Thursday when the VIX was up in the 14s, that was some of the fastest moving candles that we've had in months. Now, again, for the VIX being at 14, that's not even that high of a VIX level for movement, but, that volatility is still there. Even when we were down here in the 11s and 12s, VIX, or the movement overall of the market, was still extremely aggressive. So, all right, guys, I hope you guys have a good weekend and have a good Christmas break, and I will see you guys on Tuesday.